I believe Bitcoin mining stocks have changed forever. About half a year ago, I made a video saying that I am holding my Bitcoin mining stocks and not trading in and out of them. That kind of is an unpopular strategy in this space, but my strategy hasn't changed despite me viewing these companies differently. I still hold these mining stocks because I believe in the long-term upside of Bitcoin's price. And honestly, most traders end up getting whipsawed and hung out to dry whenever they try and trade in and out of these stocks and make money. They end up losing more money than they actually gain. As I'm recording this video, Bitcoin's trading for about $57,000. And a lot of people are freaking out because that is down from all-time highs. But we need to think about this. Let me lay out for you every single bearish catalyst that Bitcoin has faced over the past couple of years. First of all, we've had the Mt. Gox situation. About 100,000 Bitcoin have been distributed since the end of June. Then we had the Genesis situation where 25,000 Bitcoin have been distributed since the beginning of August. And then we had the German government who sold all 25,000 seized Bitcoin on July 13th. And then we've had the US government that it's rumored they've started to sell or they've sold their Bitcoin after Trump announced his plan for a Bitcoin strategic reserve and really a presidency that would stimulate the Bitcoin ecosystem in the United States of America. We've also had tightening monetary policy for the last 24 months, endless recession fears, and geopolitical tensions that seem to get worse by the day. Despite all of this, Bitcoin is really pretty close to all-time highs, sitting at $57,000 today. So we have to ask ourselves, if Bitcoin has been this strong, despite all of these catalysts working against it, what happens when we remove those negative catalysts? What happens when both monetary and fiscal policy is stimulative to the consumer and businesses and ultimately Bitcoin in general? No matter who is elected this November, they're going to have stimulative fiscal policy because they're going to be spending on a budget deficit. If Kamala Harris is elected, she'll go on a spending binge. If Donald Trump is elected, he'll cut the corporate tax rate and income taxes. Both of those things are very, very stimulative to the economy, despite them spending on a budget deficit. And what that ultimately means is economic growth is going to be above average, and as a result, inflation will be above average. I think growth and inflation will trend higher over time as a result of what both of these potential presidential candidates have laid out. And ultimately, you'd be silly to argue that if this is the case, Bitcoin is going to fail or go down in value. I think it's pretty common sense that over time, if this is true, Bitcoin's price will continue to appreciate as more and more billionaires, as more and more companies, as more and more countries buy into Bitcoin and hold Bitcoin. And it's really Bitcoin's decentralized nature that gives it value. That's why people buy it and hold it, because it's some sort of a hedge against the United States dollar or all of these central banks around the world that have been causing recessions and depressions since the beginning of time. Now, I say all of this, Bitcoin has performed pretty well and we think it will do really well over the long term, but the Bitcoin mining stocks have really struggled over the last couple of years. This chart here shows it. There are only 3 publicly traded Bitcoin mining companies that have positive year-to-date returns on their stock. And that's in comparison to Bitcoin that has returned almost 36%. And the 3 Bitcoin mining companies that are positive have had to ride the coattails of the AI trend, the AI craze of investors. And this is a problem because when you buy and hold Bitcoin mining stocks, you expect to at least outperform the performance of Bitcoin in a bull market, but certainly outperform the price performance of the S&P 500 and the NASDAQ in a bull market. But these stocks they can't even do that. And it's super frustrating, and understandably so. And this is where I get into my thesis that things have just fundamentally changed for Bitcoin mining stocks. And these are some temporary things, but also some long-term trends that I think will stick around, and ultimately they'll affect anybody that owns these stocks. But really quickly, if you are new here or returning not yet subscribed, please subscribe down below. We have one of the fastest growing stock market YouTube channels on this platform, and I'd love to continue that. Also, if you're interested in Bitcoin mining companies and operations, I have an exclusive members-only video of me touring CleanSpark's Bitcoin mining facility in Norcross, Georgia, made available on my Patreon and my YouTube page. So if you want to join the membership and get access to a bunch of other perks, hit the join button located right next to the subscribe button, or hit my Patreon link in the pinned comment. And on your way down there, hit the like button for me to help spread this video out to a wider audience. Anyways, back to the video. Why short-term do these companies have poor performance? Well, I believe that it's because there are now alternatives for big money to get Bitcoin exposure. You see, I've been in this space for 5, 6, 7, actually 8 years. One of the first companies I ever bought was RIOT Blockchain back in 2016, 2017. I don't remember exactly. I have to go find that trade in my statement. But basically, up until this year, the only way to get exposure to Bitcoin was by buying the Bitcoin mining stock. That's both because it was the most easy thing to do for retail traders and investors rather than setting up a Bitcoin wallet online. And it's just a new technology that nobody really wants to jump into because it's a headache to learn. The easiest way for retail investors and investors in general to get exposure to Bitcoin was simply buying a publicly traded company that mines Bitcoin and has Bitcoin exposure. That has changed, where we've had this launch of the Bitcoin spot ETFs, and I have it in my notes here. I think, $18 billion of inflows have come into the spot Bitcoin ETFs already. This is billions of dollars that previously would have come into the Bitcoin mining stocks. But now big money, they don't have to deal with the headaches of owning Bitcoin mining stocks. Some of those headaches we are well aware of, unfortunately. It's the fact that these companies are dilution machines. At no point in the future are they going to be cash flow positive without dilution. They have to dilute to grow. They have to dilute to pay debt. They have to dilute to pay executive salaries. Everything they do is predicated on diluting shareholders, which is painful. You've also had a lack of real business pedigree from management teams in the Bitcoin mining space. If you look at a lot of the executives now and in the past, a lot of them have zero prior business backgrounds, which is a big problem when it comes to managing multi-billion-dollar companies. And it's just a matter of fact that a lot of these companies have been insider enrichment schemes where the executives have pocketed hundreds of millions of dollars at the expense of retail traders. I'll say that recently, over the past few years, this has gotten much better. But still, it's been a problem in the past, and I would argue that all management teams in this space are still overpaid today. A lot of these management teams are making more money than the CEO of Amazon. That should not be the case. And all of these things have culminated into really poor business practices, and we've seen it. Every bear market we've gotten, bankruptcies of Bitcoin mining companies, bankruptcies of host providers for Bitcoin mining companies, bankruptcies all over the cryptocurrency and Bitcoin space in general. But again, by buying the spot Bitcoin ETF, big money, investors in general, have an alternative, an easy alternative. They can go to their brokerage and buy one of these ETFs just like they go to their brokerage to buy these Bitcoin mining stocks. And they don't have to deal with all of those bad things that I just mentioned. It's hard enough already to get somebody to take that risk of investing in Bitcoin. And then you stack on all of those risks on top of it, and it just ends up not being worth it. And that's why all of this money is going into the spot Bitcoin ETFs. Now, this also means that fundamentally, things have changed for Bitcoin mining stocks. And I started this video off by saying, I still hold my Bitcoin mining stocks. I have no plans to sell them because long term, I think Bitcoin will do well. And I think that Bitcoin mining stocks will get back to outperforming Bitcoin's price appreciation over time. Why do I believe that? Well, it starts with my premise that I think more than ever, Bitcoin mining companies are just a proxy for the amount of risk that investors at any given point in time are willing to take. A lot of investors in the Bitcoin mining space really kind of micro-analyze these companies, and they'll say that the fundamentals right now are better than ever. The technicals right now are better than ever. The charts right now are better than ever. But in the end, it really doesn't matter in this space. What matters is the amount of risk money is willing to take at any point in the future. So if we want to really diagnose if the Bitcoin mining stocks are, if you should sell them or you should buy them or you should hold them, we should ask ourselves, is risk appetite going to increase or decrease more than likely in the future? I would argue pretty easily that risk appetite of investors is going to increase over time as a result of, that fiscal policy that I talked about. That monetary policy that I talked about. It's a given fact that monetary policy is going to start to ease on September 18th when the Federal Reserve cuts the federal funds rate. These are very capital-intensive businesses in the Bitcoin mining space. They have to fork out hundreds of millions of dollars, if not over $1 billion upfront to even be a legitimate player in this space. And then every single year they have to spend hundreds of millions of dollars more just to stay afloat and to stay legitimate and one of the top players and not get squashed out of the space. This sector is so reliant on inflows of capital, and that's why dilution tends to be the only way to stay afloat, because they can take out debt and avoid dilution, but because most of these companies aren't cash flow positive and maybe never will be, they still end up having to dilute to pay down the debt because they have to raise their cash somehow. And they do that at shareholders' expense. And I've talked about this on my channel plenty of times, not necessarily in a Bitcoin mining stock video, but we talked about monetary policy. Right now, investors are pricing in 5 rate cuts over the next 6 months and more than 8 rate cuts over the next 12 months. This can only mean good things when it comes to the risk appetite of investors increasing over time. It's the way every single bull market unfolds. Investors start to chase more and more and more and more return. They start to take on more and more and more and more risk until eventually something causes that bubble to pop. And ultimately, if you've watched my other videos, that's where I think the stock market and this bull market as a whole is headed, towards a huge bubble, the likes of which we've never really seen in history, because the Federal Reserve has learned how to play whack-a-mole with different credit crises or financial crises that happen in our system. Think back to March of 2023, Silicon Valley Bank. When that failed, well, the Fed threw money at the problem by introducing the Bank Term Funding Program. That prevented that financial crisis from morphing into a credit crunch and thus an economy-wide recession. They've learned how to play whack-a-mole as a result of the great financial crisis and the great virus crisis. And even more, if you think about it, as a result of the federal funds rate actually increasing to, I think the policy rate is 5.25 to 5.5% right now, they've given themselves the ability to cut rates by quite a bit in the snap of a fingers if any sort of black swan event does take place. A black swan is something that's unpredictable, like the great virus crisis of 2020. Something like that could definitely happen, but now the Federal Reserve has the means again to cut interest rates, stimulate the economy without having to send interest rates into negative territory, which would be a headache. So naturally, as fiscal and monetary policy are set to ease and be extremely stimulative to the economy for both consumers and businesses, it means that people are going to have more money in their pockets. It means that inflation is going to trend higher over time. It means that growth is going to trend higher over time. And as a result of that, more and more money naturally is going to flow into Bitcoin. And ultimately, how could the bubble pop? Well, it could be the Federal Reserve maybe throwing money at the system when we really don't need it, aka the Federal Reserve identifies a crisis that really doesn't exist, and they stimulate the economy much more than they should, and we have a resurgence of inflation, and as a result of that, the Federal Reserve has to send interest rates to double-digit percentages. That would certainly pop the bubble, and I think that's probably where we're headed right now. But as of today, that could be years from now. And ultimately, if there's more and more inflation in the system, more and more dollars are going to flow into Bitcoin. So if you're struggling right now with your Bitcoin mining stock allocation, there's a couple of things you can do. These are very volatile stocks. I think we've all seen that. I've been saying this for years, but it takes a certain gut to be able to own these companies. And you should not put money into these stocks that you will need sometime over the next 12 months. That's just a given fact, because at any given point in time, these stocks could fall 50% like we've seen most recently, or they could rise 200, 300% over the course of 12 months. There's really no in between. Either they're downtrending super hard or they're uptrending super hard. And it takes a gut that very few people have in order to weather that storm and really succeed by investing in these Bitcoin mining stocks. So if you're finding yourself checking the price of these companies every single day, you're probably over allocated to them. You probably don't have the stomach to hold these sorts of companies. I know the allure of kind of owning a lottery ticket is very attractive and it's very tempting, but ultimately, most of the time, you're just going to cost yourself years off your life from the stress, but also money because you're so emotionally driven that you buy and sell when you shouldn't. I would argue that right now, you probably should be buying Bitcoin mining stocks, not selling them. But what are the masses doing? They're selling them right now. It's totally counterintuitive when you are an individual stock picker. And it's even more so counterintuitive when you're an individual stock picker and you're buying Bitcoin mining companies. You are going against the grain. You are doing what everybody else is not doing. So people will call you stupid and dumb. You might be down 20, 30% on your investment right away, but if you have the stomach and the gut to handle that, 20 to 30% down, you should actually root for it so that you can buy more in something you have extreme confidence in over time. You should try and tune out the noise. Ultimately, based on my research, my due diligence, I think the risk appetite of investors is only going to increase from here until this bubble pops, and this bubble might not pop for years. And if this is the case, Bitcoin mining stocks will perform tremendously over time. So just relax. Quit looking at these stock prices every single day of the week because it does you no good. It literally does you no good. You don't own lottery tickets, you own companies, and you're really making an investment based on where you think risk appetite will go in the future. You're not really concerned with the short term because the short term always misleads investors. That's why retail investors lose. They don't have patience, they don't do the research, and when they make a mistake, they try and place blame anywhere else but on themselves. So they never end up learning from their mistakes. If you do make a mistake, make it be the cost of tuition. Make it be a learning experience so that you never make the same mistake in the future. People always try and overcomplicate the game of investing. I know this is a little bit different of a space, and Warren Buffett probably wouldn't touch it with a 10-foot pole, but I think it holds true. A lot of people, even though Warren Buffett is by far the greatest investor of all time, will never follow his strategy. Because it is too simple for them. Because they think they can beat the markets by trading in and out of stocks and companies because it is much more thrilling to do that than sit and hold and wait. Despite maybe only 1% of market participants ever in history really succeeding at the day trading game, 1%. And most retail investors are trying to take on those odds. I don't think that's very smart. And another thing giving me confidence in these companies long term is just the learning curve. These management teams have been very inexperienced with zero business pedigree, as I've mentioned in the past. But as the years go by and as Bitcoin continues to mature, these management teams and these companies and these lenders and the bankers learn about this industry. They quit making these bad debt deals that cause companies to go bankrupt. They quit making the same mistakes of getting over leveraged. They quit making the same mistakes of not owning their facilities. They learn. And so as the historical poor execution goes from poor execution to bad execution to mediocre execution to good execution to great execution, and as these management teams continue to gain experience in this space alongside the rest of the Bitcoin ecosystem, the risks of owning these companies really will decline over the years. But in the end, it holds true. In order to see these stock prices go up, we need to see a bunch of money flow into this space. And the only way we end up seeing that is if risk appetite increases over time, which I think it will. Now, let me know down in the comment section below whether you agree or disagree with me. I always love having that sort of discourse. Don't forget to hit the Patreon link down below to join my membership and get access to those exclusive videos and a bunch of other perks. And again, I have a 100% refund policy if you don't find value. And don't forget to subscribe and like and comment while you're down there. And with that, have a great rest of your day. Stay blessed. Keep 10 toes to the ground and your chin up. Peace out.